The Committee on Revenue and Tax will come back to order. We do have another member present, so we can begin as a subcommittee. So we're going to begin with file item number 1, SB 964 by Senator Ciarto. Sir, please come forward with your witnesses and we can begin.
Are we ready?
We are, sir.
Okay.
Lord.
Well, thank you, Honorable Chair, and I am here to present SB 964, and thank you, Senator Bradford, for getting to the meeting this morning so we can get started. First, I would like to thank the Chair and the committee staff for all the work with my staff on this important measure, and I will be accepting the committee amendments. SB 964 is a very important bill in response to 2 recent Supreme Court rulings that have drawn our state's current guidelines for the sale of tax defaulted properties into constitutional question. With me here today to best explain the important issue is Ensen Mason, who is a treasurer tax collector for San Bernardino County, to explain the technical issues facing counties. And then I also have Jim Manley, who is the legal counsel from the Pacific Legal Foundation, to explain the legal implications of the Supreme Court rulings.
Thank you, sir. So our practice here in the committee is 2 witnesses, 2 minutes each as primary witnesses, so you may begin when you're ready.
Good morning. Am I working here?
Touch that thing.
There we go. Thank you. My name is Ensen Mason. I am the Auditor-Controller, Treasurer Tax Collector for the County of San Bernardino. I want to start out by saying I represent myself, not my association, and I'm here to support SB 964. I am stuck between a rock and a hard place. On the one side, we have the Fifth Amendment of the Constitution that says you cannot take people's property without just compensation, and that's backed by a recent Supreme Court ruling, Hennepin County, where the justices said 9-0 very strongly that yes, this does apply to tax defaulted property. On the other hand, I have state law that says that, well, we have an auction process. That's how we comply. That's how we're sure that we are paying fair value, and it works. People get their equity, and the process works. But however, we have this thing in state law that says that if a nonprofit or a government agency objects, we shall pull that property for the purpose of selling it to them, usually at far below market value. Oftentimes, the homeowner gets nothing. It is in violation of the Fifth Amendment and the SCOTUS ruling. So which law am I supposed to follow? I have 2 sides that say, opposing things. I need some kind of legislative solution to this. We also have something that concerns me. We have class action lawsuits popping up across the country. Recently, there was a $108 million settlement in Minnesota. There's 2 more going on in Oregon and New Jersey. California is much, much bigger than Minnesota, so this is going to be a much, much bigger deal. We need to fix this so that we at least are doing things correctly from here on out. I'm not sure if we can stop the lawsuit. It's probably going to show up sooner or later, but we need to fix this so at least we have mitigated the damages going forward. Thank you.
Thank you, sir. Next witness.
Thank you, Mr. Chair, members of the committee. I'm Jim Manley. I'm the State Legal Policy Deputy Director for Pacific Legal Foundation. PLF was founded 50 years ago right here in Sacramento. We have 18 wins at the Supreme Court, including Tyler versus Hennepin County, the case that brings us here today. And the simple message from the court in that case was governments cannot take more than is owed when they're collecting a property tax debt. And so reforming California's Chapter 8 process is not optional. It is required by the Constitution, required by the Supreme Court's ruling. As Ensen suggests, it is just good public policy because it is ultimately going to cost the state millions of dollars in claims if it's not reformed. While California law generally prevents the government from taking more than is owed, the Chapter 8 process creates this problem because the sale happens off-market. One county transferred 4 undeveloped commercial properties to another government for less than the assessed value of just one of those parcels. There are millions of dollars in claims outstanding. Regardless of the reason, counties cannot transfer property under Chapter 8 for less than fair market value. If they do, they face claims under Tyler for taking property without compensation. at this bill gives counties the information they need to set the price of a property in a Chapter 8 sale at fair market value, at least. If the property is worth more than the tax debt and the fees and penalties, then it should really go to a public auction, and the government should get the most money for it. But if it does go to a Chapter 8 sale, it should at least be sold for the amount that the property is actually worth, and not a severely discounted price that deprives the property owner of their equity in their property.
Thank you, sir. Okay, we're going to now have those who would like to speak in support of the measure to do a Me Too, we call it here in committee, where you come up to the microphone and give your name, affiliation, and your support for the bill. So those who would like to add on now, this is the moment to come to the microphone.